The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Boland, and I am the aggressive growth stock strategist. And I've got two more stocks for your aggressive growth stock radar screen. And let's just jump right into it with Acacia Communications, and that's ACIA is the ticker. It's a Zacks Rank 1, and that's a strong buy. And in most of these aggressive growth videos, you'll see that we have a strong growth style score and a weak value style score. And that tells me right away I am on the right path, because growth investors and value investors are looking for different things. Now, Acacia is that fiber type provider. They only have a few customers, but things have kind of turned around for them now. And it's been a while. This one was like a Wall Street darling for a while, but it fell by the wayside. But if we look at it, this is kind of interesting here. We've got four solid beats. And I mean, these are good sized beats. You're averaging 27%, and these are all positive numbers. I mean, there's a lot to like with that, right? Now, if we take a look at estimates, and really the Zacks estimates the last 60 days. So let me get rid of that dot by the 49 cents. But 46 to 63. That's a great move for this quarter. For next quarter, 38 to 47. Excellent. The year number is what really moves the Zacks rank there. And we see, a 40-cent move from 161 to 201. And then next year, a little bit of follow through there from 205 to 233. And that's what we want to see in aggressive growth stock. We want to see estimates moving higher for this quarter, for next quarter, for the full year, and for next year. That tells us that there's a lot of good things going on. So the valuation, it might be the bit of concern here. 34 times forward earnings. It's a lot. Not terrible, not a ton, but I mean, it's a healthy number. It's not a nifty 50, but it's close, right? And then we got price to book of just under 5, price to sales of 6. Those are difficult numbers, but 26% top line growth rate. I like that. I like the margins moving sharply higher. That's really good. Net margin could move a little bit better, but I mean, your operating margins are kind of the tell of what's coming, and your net margin will follow that. Let's take a look at the chart, and you can see what I'm talking about here. This one was at Wall Street darling coming public, and shooting right up and shooting right down, but it's been coming back here. And I think, we just had a solid earnings report here. Obviously there's been nothing but beats the last few times here, but, the stock looks pretty good. This is something to definitely put on the radar screen again. I know that the worry is, the limited client base, but it looks to be moving in the right path, and we take a look at this big volume stick right here, obviously on an earnings day, and the stock moving up significantly. That's a real tell that it's time to change your thinking on this thing. I mean, volume has fallen off of this over the last. I mean, if you look at the middle of the year and then more recently, but I like this as a chance to at least get back up to 80. So keep this one on your radar screen. Let's roll ahead to the next one, and it's CSOD, or Cornerstone on Demand, and CSOD is the ticker. It's a Zacks rank number 1. It's a strong buy. A for growth, F for value, that divergence that we love to see. And, this is all about talent management. It's kind of like that software as a service for HR for enterprises. So if we take a look at the earnings history, we do see that miss right there. It was a 1 cent miss. But every other beat has been pretty good. I mean, a 4, a 7, and a 2. All earnings again, and the 14%, average. That's pretty good. Now, if we look at estimates, we got a little bump here. We have an NA. That's too bad. But that bump translated directly to right there. And then next year, a little tiny move up too. You'd want to see a little bit more action, but these names are already, priced pretty significantly. There any of these software as a service style names. So that's that 55 times forward earnings, and that's difficult. to grasp. When you're an asset slim company like a software company, your price to book is going to be pretty exorbitant here. So 35 times. I would say 25 is more like the average. So this is trading a little bit above. I'd want to see a little bit more growth than 8%. And margins flipping from negative to positive is good. We'd like to see that getting back on the right track. And that'll help all these metrics really turn around as margins get back from being negative and run higher. Let's take a look at the chart here. You can see this is a kind of a herky-jerky, but for the most part, we're going to stay inside of this kind of channel here. And if we do that and extend that, you can see 75 isn't, out of the realm of possibility. It's just these, can you withstand these downdrafts, these pullbacks, or are those the times to be buying, And if we take a look at the stock right now versus where it was in the chart, let's scroll up. We see 57. That's just a little bit above where you would think maybe 55 would be just about that range. So I would be giving CSOD, or Cornerstone on Demand, definitely a deeper look. Well, that's it for this week. Be sure to join us next time when we take a look at 2 more stocks for your aggressive growth radar screen.